At the Milken Global Conference held during the first week of May in Beverly Hills, a landmark announcement was made that could redefine the role of artificial intelligence in the financial sector. Palantir Technologies, in collaboration with TWG Global, Elon Musk's artificial intelligence venture, and the Mark Walter Investment Group, revealed a new strategic alliance aimed at transforming how artificial intelligence is applied across regional banking institutions. This announcement wasn't just a declaration of intent, it was a signal that some of the most influential names in technology and finance are coming together to reshape the competitive landscape for smaller banks. Alex Karp, the chief executive officer of Palantir Technologies, stood alongside Thomas Tull, the co-chairman of TWG Global, to outline the purpose behind this joint effort. Their message was clear: regional banks, long overshadowed by the deep pockets and technological muscle of major financial institutions, deserve tools that allow them to not only keep up, but to thrive. At the core of this effort is a shared belief that artificial intelligence is not just about futuristic theory, it is about practical, revenue-generating solutions that can immediately impact the bottom line. Palantir Technologies brings a powerful foundation to the table. Over recent quarters, the company has recorded an impressive expansion in its commercial operations within the United States, specifically showing a year-over-year growth rate of over 70% in its domestic commercial revenue. This remarkable uptick serves as validation that Palantir's offerings are not only scalable but also adaptable across various industries, especially those that demand high levels of security, automation, and data integration. By pairing this technological might with the financial insight and strategic guidance offered by TWG Global, the partnership aims to break down barriers that have historically held regional banks back, namely regulatory complexity, outdated systems, and limited budgets for innovation. The context of this announcement is especially important given Palantir's recent financial performance. Although the company's stock dipped following the release of its earnings for Q1, many financial analysts pointed out that the underlying numbers were fundamentally sound. But Alex Karp was not deterred by the temporary market reaction. Instead, he redirected attention toward what he views as the more meaningful story: Palantir's evolution into a critical provider of artificial intelligence tools that produce real business outcomes. In an interview with CNBC's Power Lunch, Karp summarized the company's mission succinctly. Palantir aims to give its allies a strategic edge that would otherwise be out of reach. He emphasized that while artificial intelligence has often been discussed in theoretical or hype-driven terms, Palantir is showing that it can deliver actual results, especially in sectors where measurable performance is non-negotiable. A significant strength of the new alliance lies in the complementary nature of its key stakeholders. Karp praised Thomas Tull's extensive experience in both finance and defense technology, stating that this unique background played a critical role in shaping the partnership. Together, Tull's investment expertise and Palantir's infrastructure, enhanced by recent innovations in large language models, are expected to empower smaller banks to perform at a level similar to that of large financial institutions. This includes increasing revenue streams while simultaneously keeping costs under control. According to Karp, the vision is not about competing with big banks through scale, but through intelligence, automation, and adaptability. This partnership also seeks to directly address the persistent hurdles that regional banks encounter in deploying advanced technology. From complex compliance standards to legacy IT infrastructure, these institutions often struggle to modernize without incurring significant risk or expense. Karp stressed that the proposed solution is not simply another software package, but a full-fledged data-centric ecosystem. These platforms are designed to streamline operations, enhance decision-making, and most importantly, generate profit that can be tracked and quantified. One of the more compelling moments during the conference came when Karp contrasted two divergent approaches within the artificial intelligence revolution. He pointed out that many providers in the industry tend to overpromise and underdeliver, relying on impressive language rather than concrete value. In contrast, Palantir and its partners are positioning themselves on the side of tangible outcomes. Karp explained that the goal is to work closely with financial institutions to build tools that can be deployed quickly and efficiently, and which only yield financial rewards for the technology provider if they result in greater earnings for the client. Backing up this vision is a real-world proof point. Thomas Tull explained that his own financial holdings have already adopted Palantir's platform and are experiencing what he referred to as a material impact on their operations. With Drew Kuchar, formerly a systems architect at JPMorgan Chase, on Tull's team, there is significant technical expertise being applied in testing and refining Palantir's artificial intelligence tools. Tull emphasized that their approach is grounded in practical outcomes, not theoretical benefits. Beyond technology, the executives involved agreed that this endeavor is as much about restoring credibility in artificial intelligence as it is about innovation. As Karp explained, success for Palantir and its partners is defined by their ability to operate downstream of value creation, a phrase that encapsulates the company's strategy of aligning its revenue with the actual performance improvements of its clients. In his words, if the organizations Palantir supports are not making money, then Palantir should not be making money either. This results-driven mindset reinforces the authenticity of their mission, and distances the company from artificial intelligence ventures that deliver little more than conceptual presentations. The evidence supporting this strategy can be seen in Palantir's own financial trajectory. Long known for its collaborations with government agencies and national defense, the company is now carving out a dominant position within the private sector. The 71% increase in United States commercial revenue serves as a clear indicator that artificial intelligence, when implemented with a focus on profitability, can thrive far beyond the public sector. These results are not just metrics, they are validation that the company's technology is solving real-world problems and generating sustainable business growth. During the panel, CNBC host Brian Sullivan quipped that artificial intelligence is often good at taking money, but not as effective at making it. Karp responded by pointing to the financial rule known as the Rule of 40, which evaluates a company's profitability and growth rate. He stated that Palantir had achieved a score of 83, one of the highest ever reported. This reinforces the narrative that Palantir is not just innovating for the sake of novelty, but for the purpose of building a long-term, profitable enterprise. Moreover, while many artificial intelligence companies are still in the research and experimentation phase, Palantir has already made major infrastructure commitments. With a processing center based in Memphis and substantial capital allocated toward operational scalability, the company is well positioned to meet rising demand. Brian Sullivan remarked that in choosing Palantir, clients are not investing in a mere concept. They are investing in a mature, functional solution that is already producing results. Looking ahead, Thomas Tull reaffirmed that the initiative is not something that will take years to materialize. He indicated that by the end of the current year, the joint team expects to have major clients actively utilizing their artificial intelligence solutions across various verticals, including banking, insurance, and asset management. This confidence stems from the systems already deployed within his own holdings, which are providing immediate feedback and enabling continuous refinement. For regional banks facing mounting pressure from regulators, cybercriminals, and shifting consumer expectations, the partnership between Palantir Technologies, TWG Global, xAI Group, and the Mark Walter Investment Group presents a compelling offer. It is not a theoretical promise or a distant development on the horizon. It is a practical solution backed by data, deployed with urgency, and designed with profit in mind. At its heart, this effort aims to level the playing field, giving smaller financial institutions access to world-class artificial intelligence that can help them grow and compete with the best in the industry. In the end, Palantir Technologies has formed a strategic artificial intelligence alliance with TWG Global, xAI Group, and the Mark Walter Investment Group to equip regional banks with revenue-boosting AI tools that rival those of larger institutions. Announced at the Milken Global Conference, the partnership leverages Palantir's rapidly growing commercial platform, highlighted by a 71% year-over-year increase in U.S. revenue. Palantir CEO Alex Karp and TWG's Thomas Tull emphasized the focus on measurable financial outcomes, asserting that their systems only generate returns for the provider if clients see real profit increases. Already implemented in Tull's own financial holdings, Palantir's AI tools are designed to help smaller banks enhance efficiency, cut costs, and compete more effectively, marking a shift from theoretical AI hype to practical value creation in the financial sector. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.